gentlemen.
My name is Arthur James Brooks.
My name is Godwin Sunday.
I am Ijoma Victor.
My name is Cynthia Agbo.
Josephine Bitru.
I bet you already know that this is
Rapid Television.
All right, good morning and welcome to Business Lens on Rapid TV Abuja. It is great to have you with us on this edition, second edition for the year, by the way. So let's begin with the key business trends that matter right now, starting from the headlines. I don't know if you've seen this, but PwC is projecting that Nigeria's poverty rate will climb to 62% by 2026, pushing an estimated 141 million Nigerians into poverty, despite recent macroeconomic stabilization efforts. And next, global real wages recorded their fastest growth in over 15 years in 2024, rising by 2.7%, as easing inflation helped restore workers' purchasing power after years of cost of living pressure. Also, the Center for Promotion of Private Enterprise, Dr. Muda Yusuf, says Nigeria can grow GDP by 4 to 4.5% in 2026 if reforms are sustained, budget assumptions are realistic, and risks from oil volatility, insecurity, and tax controversies are carefully managed. Also, the Securities and Exchange Commission has cautioned the public against dealing with an online investment platform called Voya Investments Management, or VIM, over suspected fraud. And from the markets, Nigeria's stock markets kicked off 2026 on a historic high, crossing 100 trillion naira, a market capitalization, as the all-share index rose 1.74% to 159,218 points amid strong investor demand. We'll look at these stories and more. Stay with us. I am Faith Dafa Joseph. All right, welcome back. Welcome to the show. As of January 8th, 2026, Nigeria's economy presents a mix of promise and caution. The stock market recently grossed 100 trillion naira. That, of course, is signaling strong investor confidence, and global real wages show their fastest growth in over 15 years. Yet domestically, poverty is projected to reach 62%, and GDP growth of 4 to 4.5% depends on sustained reforms and realistic fiscal planning. At the same time, you have SEC warning against unlicensed investment platforms, which underlines risks to investors. So let's get into, the nitty-gritty of the stories, starting from this report from the PwC talking about poverty levels in Nigeria projected to worsen significantly. And it is estimated that up to 141 million Nigerians, that's about 62% of the population, could be living in abject poverty by 2026. This projection is contained in PwC's Nigeria's Economic Outlook 2026 report, which notes that recent macroeconomic stabilization measures have yet to translate into meaningful improvement in household welfare. Now, according to this report, weak real income growth combined with persistently high living costs will continue to squeeze households. Even if headline inflation moderates, the PwC is saying that most Nigerians are unlikely to see income increases sufficient to offset rising prices in the near term, and that limits affordability gains and deepens vulnerability across low and middle income groups. This report is also highlighting consumption patterns as a key driver of worsening poverty, and it notes that food accounts for up to 70% of spending among low-income households. That is really steep, because if you're spending 70% on food, how much do you have to spend on accommodation, on transportation, on school fees, on rent? So at the end of the day, 142 million Nigerians thrown into abject poverty in 2026 is something that should be of real concern to the government. Now, let's get to the next headline. This is a global story talking about global real wages recording their fastest growth in over 15 years in 2024, and it's rose by 2.7%. And this is according to the International Labour Organization's Global Wage Report 2024-2025. This marks a sharp reversal from 2022, when inflation drove real wages into negative territory for the first time since records began in 2006, following the pandemic era cost of living crisis. The ILO is attributing this recovery largely to easing inflation, particularly in advanced economies where you have aggressive monetary tightening helping tame price pressures. After a modest rebound of about 1.8% in 2023, Real wage growth strengthened further in 2024 as earnings once again outpaced inflation, restoring part of the purchasing power lost during the inflation surge. However, this recovery remains uneven amongst regions and income groups, excluding China. Global real wage growth stood at 2.3%, while advanced G20 economies posted modest gains of about 0.9% after 2 years of decline. By contrast, emerging G20 economies maintained strong wage growth throughout the inflationary period, and that underscores widening disparities in labor market recovery. Let's talk about this story next. This is interesting. The Security and Exchange Commission is warning Nigerians against engaging with an online investment platform known as Voya Investment Management, or VIM, over suspected fraudulent activity. And this is very important. SEC releases these warnings constantly, even though people keep falling for it. But SEC is saying that the platform falsely claims regulatory oversight while offering investment services in Nigerian financial instruments. The Commission also clarified that VIM is not licensed to operate in Nigeria's capital market and is urging the public to verify investment platforms before committing funds. Okay, this is very key because you always have a lot of Nigerians flock to these platforms and then they start crying after, the returns don't come in. So I hope everybody pays attention to this. Let's talk about what's happening in the market. Nigeria's equity market has reached a historic milestone on January 5, 2026, with total market capitalization surpassing 100 trillion naira for the first time. And this is driven by sustained investor optimism and strong demand for large and mid-cap stocks. Market value rose from 99.9 trillion naira to 101.5 trillion. And this reflects renewed confidence at the start of the year. The all-share index surged 1.74%, gaining 2,725.8 points to close at 159,218.2, bringing the market within reach of the 160,000 point mark. Several stocks have hit the daily 10% gain limit, while trading activity increased significantly, led by heavyweights such as Zenith Bank, WAPCO, and Aradel. We'll take a quick break, and when we come back, we'll have the Chief Executive Officer for Center for Promotion of Private Enterprise, CPPE, that's Dr. Muda Yusuf, join the conversation as we start to look at the new tax laws, the controversies, what you need to know, and of course, what it entails. So stay with us. Nigeria's economy, the global market, what does it all mean for you? From stock market insights to global financial news you need to know. From Wall Street to the Main Street and, of course, the marketplace. Get the answers you need every week on Business Lens with me, Faith Dafa-Joseph, as I bring into focus the stories, strategies, and shifts shaping our economy. No angle is missed as I talk about the business, the people, patterns, and possibilities behind them. Welcome to the Business Lens.
Rapid TV, rooted in truth, driven by impact.
My name is Faith Dafa-Joseph.
Name is Martha Alu.
My name is Victor Arki.
My name is Divine Alex.
My name is Esther Omen.
My name is Arthur James Bruce.
My name is Godwin Sunday.
I am Ijoma Victor.
My name is Cynthia Agbo.
Josephine Bichu.
I bet you already know that this is
Rapid Television.
Time is power. Our lives are powered by the sun. As the sun rises, so do we. As we trust it to rise and set without any worries interrupting your morning with our hybrid all-in-one inverter, powering our prosperity and happiness.
Making the shell. Start time solar.
But also nurture what is dear to us, powering trust and support, empowering us to do things that really matters. Start Times Solar, power your life.
In a world where every swipe, click, or tap is shaping our future. Technology is no longer a distant dream. It is the heartbeat of Africa and the world at large. From innovations to gadgets to startups and digital lifestyles, Tech Up with Victor takes you round. A show that makes technology simple, practical, and exciting for everyone. Join us every week on Rapid TV as we break down tech trends, spotlight African innovators, and connect Africa's digital story to the global stage. Tech Up with Victor, where innovation meets you.
This is Rapid Broadcasting Network, RBN. We connect people, power stories, and amplify voices. On Rapid TV, we're rooted in culture and your window to the stories that matter. From news to lifestyle, we inform, entertain, and uplift. Join Rapid TV on Star Times Channel 176, Nightcomsat. On Rapid FM, we speak your language from the soulful airwaves of Umuahia to the vibrant culture of Port Harcourt and beyond. More than broadcasters, we're creators, amplifying that voice within with powerful content across TV, radio, and digital. Join us at rbnradiotv.com and all our social media handles. One network, one voice. Rapid Broadcasting Network, RBN. The sound of your city, rooted in truth, driven by impact.
From the heart of Africa, where dreams are born and passion is boundless, a new wave of talent rises. In La Liga, these extraordinary athletes are not just playing the game, they're transforming it.
Danny Rodriguez, the man chasing, it's Lamine Yamal! What a magnificent goal that is!
They shine on the world stage. Watch as they redefine football, inspire millions, and make history. La Liga, where dreams become reality.
Nigeria's economy, the global markets, what does it all mean for you? From stock market insights to global financial news you need to know. From Wall Street to the main street, and of course, the marketplace.
Get the answers you need every week on Business Lens with me, Faith Laffer Joseph, as I bring into focus the stories. Business Lens on Rapid TV, and we're going to dive straight into the next phase of the conversation with Dr. Muda Yusuf, who is the Chief Executive Officer for the Center for the Promotion of Private Enterprise. Okay, now Nigeria has entered 2026 with new tax laws. They started on the first day of the first month of the year. It's now gazetted and enforced. Well, gazetted in two different instances, and this is, of course, instead of presenting clarity, it has triggered anxiety and controversy. Right? It went from mandatory compliance timelines and expanded enforcement powers to bank transaction, reporting thresholds, and fears of squeezing informal earners. We have critics argue that the reforms risk punishing survival-level Nigerians while trust in government remains weak. Now, the real question is no longer whether tax reform is needed, but whether its design and implementation can raise revenue without deepening hardship or resistance. So I move to Dr. Muda Yusuf very quickly. It's great to have you join me today, on the show. It's been a while, so I should say Happy New Year's or something. Welcome.
Happy New Year. Thank you. Thank you for having me.
All right,
it's a pleasure. It's been a while.
Yes, it has been a while, so it's great to connect with you again. One of the things that I have noted, of course, is that CBP has been very, very vocal where this taxes are concerned, whether you're talking from the consumer level or businesses, or, you've just been really vocal. So one of the things that you argued is that tax reform success depends more on implementation than legislation, and you were presenting something about careful sequencing. So what would that look like, for Nigeria in 2026 if we're looking at, this tax laws?
Yes. Well, the tax laws in principle are very okay, particularly when we are looking at an economy or a society that is much more advanced than what we have here in Nigeria. So the point about implementation is that while the legislations are good, they are the ideal kind of legislation that you should have for an economy that wants to make progress. But we need to localize those legislations. And what I mean by localizing is that we need to take into account the peculiarities of our own society. And when I'm talking about peculiarities, I'm talking about the fact that we have an informal economy that is almost half of the entire economy. We have the literacy level is extremely very low. The culture of record keeping in the informal economy is extremely very low. And this is an economy that accounts for about 90% of the jobs in this economy. That is one. The second point is that we are coming from a situation where the citizens and even businesses are still recovering from the shocks of economic reforms. So if we are now coming with another reform, implementation of such reform has to be done cautiously, carefully, strategically, and in a socially sensitive manner. You know, that is the whole essence of what we were saying about implementation. The law is already here. We can't change the law within the next few months or so. But the implementation has to take into account these peculiarities and sensibilities of the citizens and the trust level. Because, I mean, for some people, they don't want to hear anything. Yeah,
I was going to get to that because, I mean, some people would argue that Nigerians are suffering from reform fatigue, right? There's been so many reforms, most of them on paper, really, that has not really translated. If you look at the PwC report that just got out, talking about, 141 million Nigerians being thrown into abject poverty in 2026. But one of the things that you also talked about, which you were getting to, is the issue of trust for Nigerians. For many Nigerians, one of the things that you quoted in an article that I saw was that past reforms, you say, have translated into higher living costs and declining welfare, with little evidence that the sacrifices made resulted in improved public services. So for Nigerians who have had to go through different reforms and have not seen it translate into anything for them, when we talk about social welfare, for Nigerians that do not trust the government, how are they supposed to trust that the tax reform will be better, will make things better?
Well, that is the challenge of trust in the whole context of this tax reform. And that is why it is important that first, the education and enlightenment is much more robust. And it will have to take a much longer time than now. I mean, we have to even extend it a lot more, and because, again, the reform has been challenging, just as you said. And at the start of the reform, the whole essence of the reform was to reposition the economy, to make the economy better and all of that. And the government itself has been struggling to convince the citizens that this reform is for their good. For those of us that understand a bit of economics, we know that in the medium to long term, it's a very good reform. If you don't want the economy itself to collapse completely. But for the ordinary citizens, they are wondering that, okay, 1 year, 2 years into the reform, we are yet to see the benefit. So if you are coming from that background, there's already a trust issue as far as anything reform or tax is concerned. And for some people, no matter what you tell them about the fact that this is for the good of the common people, it will be difficult for them to believe. And this is coming from past experience. So that is why it is very important that to understand that we are dealing with a socially and politically sensitive situation.
Okay, so let's stay with the issue of trust. Yes, let's stay with the issue of trust for a minute, because these tax laws, when they were signed in 2025, that was in June, it was supposed to give an extra 6 months for everybody to get used to it, get businesses to now start planning towards 2026. But what we have seen in the last couple of months since last year was saying, oh, there's a there's a gazetted copy, by the ministry or the tax committee, and then there is now, the one that was signed by lawmakers. In fact, a couple of days ago, you had lawmakers actually release that, trying to state that, well, there's a lot of discrepancies between what was signed by the president, what was presented by the National Assembly, and what is right now being gazetted. So it also really affects the level of trust. One of the things, the discrepancies that we see with that is the kind of powers that have now been abrogated to the tax authorities, where they can make arrests, where if you have disputes about your tax payment, you have to, before you can even start to pursue the issue, you have to pay about 50% or 20% for your issue to even be heard. And then even the National Assembly noted that there was a removal of oversights, almost complete oversight, removal of complete oversight for the National Assembly on the tax committee in the gazetted one. So when you look at the issue of trust, Nigerians don't necessarily know which one of the laws, we're looking at or we're implementing. What can you say about that?
Well, those things affect or has affected the credibility of the whole process. Because because there are two dimensions to this issue of trust. There is issue of trust about the legislative process, which is about what is gazetted, what was approved, what was signed. There is the issue of trust about the outcome of the reforms. Now, for the citizens generally, the bigger issue is not even so much what is gazetted, what is not gazetted. The bigger issue is that they are now seeing reform as synonymous with hardship, going by their experience. So when you are talking about another reform, it will be difficult to convince them that this is for your own good, unless the experience proves otherwise. Now, the other leg of the trust issue is the fact that the documentation itself has been doctored or tampered with during the legislative process. Some people believe that maybe it's an attempt to weaponize the tax legislation, to target maybe political opponents or to target people or something like that. So there is that insinuation in the fact that maybe that is what this is all about. But the good news is that I think this has been cleared, because I've listened to the committee chairman, Mr. Oyedele, I've listened to the FRS executive chairman. They have cleared the air on this. And I'm also sure that even within the National Assembly, these issues have been properly harmonized. So that controversy, I'm sure, has fizzled out in a way. The bigger issue now is to convince the ordinary Nigerians that this is for your own good. And that is why, personally, I will suggest that we have a phased implementation of this to give us more time to enlighten people and for people to experience it, that this is actually for our own good.
Let's talk about this mandatory bank transaction reporting risk. There is, you say it has been cleared away, the issue of the gazetted one and the signed one, but I think it's still ongoing until we get a formal response from the National Assembly about it. Because I know that for the one for the National Assembly, I think it was supposed to be an annual check, and then you now have this one saying a quarterly check. So let's talk about this mandatory bank transaction reporting. Do you think it would, discourage formal business activity rather than expand the tax net?
No, of course, it has implications, because when you have this mandatory reporting by banks, to the tax authorities of a particular amount, once your transactions in your account reach a threshold of 25 million per quarter. The banks are mandated to report those accounts to the tax authorities. Now, the tax authorities and the committee have been struggling to explain that this is not intended to withhold any people. It's not intended to be taxing people's accounts. There has been a lot of explanation on that. But the question is, again, it comes back to the issue of trust. If you don't want to use it for anything, why are you asking that the banks will report those transactions to the tax authority? That is the question. So again, we need to struggle to convince people that this is not about going after the balances in your account. And in fairness to the tax authorities and to the government, they have been doing a lot to convince people. But when trust is broken, it's not easy to fix. That is the challenge that we are facing.
That the government has.
Now, some SMEs, for instance, had argued that most of the transactions that go through their accounts are not exactly even their money. Take somebody who is a contractor or somebody who is a clearing agent. Your client has given you money to buy this, to buy that, to pay some artisans and all of that. These monies go through your account. Then somebody sees it and says, this account is robust. How much tax has he paid? Invite him for questioning and all of that. That is a concern. Or somebody who's a supplier. You are supplying maybe gravel or you are supplying some equipment to some company. They pay the money to your account to go and supply. That may elevate or boost your turnover. So they can come after and say, okay, come and explain. You have so much money moving in your account. Who is the owner of the money? Is it your income? How much tax have you paid? Although there's a window for you to explain. But the fact that you are likely to be invited to come and be explaining the transaction is an issue, especially when it comes to as low as 25 million naira in a quarter. That's of turnover. In a quarter, many SMEs will fall into that.
Yeah.
So these are some concerns that people have. Then there's also the concern about filing. The law says that everybody must do filing annually, whether you are exempted from tax or not. Now, you have an economy where we have so many people in business who are not literate. We have so many adults, sometimes they don't have, you have Okada riders, you have market women. The law is saying that everybody must do filing. What does this group of people know about filing? What do they know? Because you have to fill the form, you have to say how much income you are earning, you have to say what your expenditure is, you have to say what the profit is. That is what is in the law. Although in the implementation, there's now an explanation that the informal sector may be exempted from that, but that is not in the law.
Okay, let's talk about that. Yes.
Anybody can wake up and go to the market and say, this woman that is selling tomato, have you filed your returns? You have not filed your returns, it's an offense.
Dr. Muda, let me bring you back to something. Let me bring you back to something. There was something that you said that I want to hold on to because I want you to explain that a little. I'm going to quote you here. You talked about it should be shifting the emphasis from penalties to compliance building will produce more durable outcomes. And you also said the objective should be to grow the tax net organically, not force it prematurely. Do you think that this is what is happening? Do you think it's more punitive than actually, more encompassing of the kind of peculiarities in our economy? I mean, the informal sector is large. You talked about it being about 50% or even more. Do you think that it's more punitive than encompassing?
No, it is the implementation that will define how it will look like, that will shape it.
Okay.
What is in the law is in the law. But it's one thing to have a law, it's another thing to implement it in a way that is sensitive to some of these things that I'm talking about. It's already in the law. If you don't file, it's an offense. If you don't keep books, that's accounting records of your transaction, it's also an offense, even if you're exempted. But in the implementation, I hope that will not happen to the lower rungs of the ladder. That is the point I'm making. If that doesn't happen, if they concentrate more on persuading and enlightening people at that level, and they are the ones in the majority, rather than imposing fines on them, that is the kind of thing I'm talking about. That we should shift focus from imposing penalty to persuading and encouraging more people to come on board. Otherwise, we push more people even into the informal sector.
Yeah. So
you put them into a situation where they don't want to even put their monies in the bank. They don't want have anything to do with any institution or state. Those are the risks that we run. So for now, I think it's better to just concentrate on the formal sector of the economy and gradually onboard those micro enterprises and all of that.
So let's talk about what labor unions are saying.
That's my own suggestion.
Yeah. Let's talk about what labor unions are saying about this. NLC is arguing that the new tax regime, it excludes workers' inputs and that it may add financial burdens on low-income earners. So while you're having critics say that the laws could deepen economic hardship, how should the government balance progressive taxation with social equity in 2026?
Well, the point again is that we again, it comes back to implementation. We have a band now that has been exempted. A band, I think 800,000, taxable income of 800,000 and below have been exempted from pay. Now, the question is, how much can even 800,000 buy? So going forward, we should expand that. We should expand it to minimum of 1.5 million.
Okay.
Given what the economic situation is and given the value of the naira today. So that exemption threshold has to be expanded. I mean, we are talking of people who are earning less than 100,000. I mean, how much can 100,000 do today? You have to pay house rent. You have to pay for transportation. You have to pay school fees of your children. You have to feed. If you have health challenges, you have to do some, when you look at all of this, my view is that the relief that have been given needs to be a lot more. But again, reform is a journey. It's not an event. It's a process.
Okay.
As we advance with the implementation, we should be fine-tuning it. No reform is perfect. I was just reading a document from KPMG that highlighted a number of gaps in the tax acts, tax laws. Quite very obvious. So it's something that we continue to fine-tune as we progress with the implementation.
Okay. One of the things you mentioned was relief caps, right? One of the relief cap that they talked about was the 500,000 annual rent relief cap. What do you think about that? Do you think it's adequate?
No, that is very low. That is very low. Faith, you stay in Abuja now. How much is a 3-bedroom flat or 2-bedroom? I'm not talking of even in highbrow areas. Even in some medium areas. And I mean, if you are now given a maximum relief of just 500,000, that is too small. In an economy where you have to pay your own school fees for your children, you don't have very good public schools.
Yeah.
You have to take care of your health care because you don't have very good public hospitals. You have to pay transportation because you don't have very good public transportation system. These are areas in which government should have provided some relief so that when you are talking about this kind of tax or this kind of relief, you will understand. But if your house rent is maybe 2 million, 3 million, and you are only given a relief of 500,000 naira, that means after you take away the 500,000 naira, the rest is taxable. So those reliefs are not good enough. And because we all need to be careful, we have been talking about the low-income people, even the middle class. This tax reform is going to squeeze the middle class. That is the reality.
Wow.
But again, I must emphasize, reform is a journey. This is the beginning of the journey. It's not an event. So we should begin to fine-tune it in the light of implementation experience. I think we should emphasize that.
Let's quickly talk about this capital gains tax. You have business groups and organized private sector stakeholders warning that provisions such as the sharp increase in capital gains tax and ambiguous treatment of incentives may hurt investment and competitiveness. What are your takes? What's your take on this, and what adjustments, can protect business confidence without undermining revenue goals? Because we're looking for investments, right? So a capital gains tax, how does that hurt or help us?
Well, the capital gains tax, the movement from 10% to 30% is a bit on the high side. I must also say that at least the capital gains tax doesn't affect all investors in the stock market. I think there's a threshold. And the threshold is a bit higher. I don't know the figure now, but it is high. So it is targeting the top end of players in the market, and most of them institutional investors. But when you talk about the stock market, those who actually make the market tick, most times are these institutional investors. Some of them foreign, some of them domestic.
Yeah.
So if they now have to pay 30%, coming from 10% to 30%, some of them may begin to look at other areas to invest. That is the reality. And that may have implications for the stock market. It may have implications for even the movement of prices in the stock market. Because some of these institutional investors, they are the market makers. And if prices are not moving up and all of that, what benefits will people get from investing in the stock market? So that is the risk that one poses. Although when the finance minister visited the stock exchange, I think there was some clarification as to how it's going to be modified and all of that. I don't have much information about that. At least trying to give investors in the stock market some level of confidence that the situation is not as bad as it looks. That is one. The same thing with and even with the capital gains tax. Now, if you bought a share at maybe, let's say 100 million, and you are selling it, maybe at the end, maybe the time you are selling at 200 million. You made the gain of 100 million. But you have invested some money. Maybe you have borrowed funds to invest in the market. Even if you have not borrowed it, that money has an opportunity cost.
Yeah.
So what of the cost of the investment? Are you going to, it's not clear whether you'll be allowed to now take it away from the capital gains before you now begin to pay the tax. Because the capital gains has an investment component. You have invested some money.
Yes.
The money invested has a cost. Just as if they are imposing company tax on you, you remove your cost, it is the profit that they will tax.
Yeah.
The totality of the capital gains is not profit because there is a cost to it. So if the cost of fund or something, you are going to net it off before the thing is taxed at 30%. These are some clarifications that some investors are worried about. Then it also affects real estate. Real estate is booming now because people buy and sell because of the capital gains, because of capital appreciation.
Exactly.
Now that the tax of 30% is waiting for you, it may also affect the real estate market.
Well,
so these are the concerns in business about these things.
Okay. I mean, the truth of the matter is, like you said, it is a journey. It's not an event. So let's hope that it gets tweaked as we go along, and that all of these concerns, all of this ambiguity is cleared up, because there's a lot of vagueness and ambiguity in the laws as of now. Thank you so much, Dr. Muda, for being on the show and helping us, unpack these issues. We appreciate your presence.
Thank you.
Thank you so much. It's good to see you again.
Yeah, thank you. It's a pleasure. Thank you.
Enjoy the rest of your day. Yes.
Okay.
All right, then. And that's our business lens for today, where we've explored Nigeria's economy, markets, poverty, wages, and taxes. Don't forget to follow us across all social media channels for more updates. I'm Faith After-Joseph. Thank you for watching. See you next time. The Rapid TV News comes up at 12, so stay tuned.